Silver back in 1980 in the surge then was 6.5% of the price of gold, 1 ounce to 1 ounce. And in 2011, it was 3.5% price of gold. Right now, we're 1.4. Okay. Why, if silver has already broken out of this 50-year decade of lethargy or suppression, might go up quadruple. You can bet that spread might too. Maybe those old highs on the spread relationship will come out as well. Meaning, hey, the high we made in 80 and the high we made in 2011 on a relative basis to gold, even those are coming out. In which case, you do the math. Take silver to 6, 7, 8% of the price of gold. Don't be surprised.
For months now, silver has been the most misunderstood asset in the global market. Analysts keep calling its price action overextended, speculative, or unusual. But when you strip away the noise and go straight to the structural forces shaping this market, the message is unmistakable. Silver is no longer trading like a sleepy industrial metal. It is behaving like a monetary asset that has been held underwater for decades and is now exploding upward to reclaim its historical role. What Michael Oliver and Alasdair Macleod lay out in their latest interview is not a story about short-term volatility or price targets plucked out of thin air. It is a structural revaluation. Oliver brings the technical evidence, showing how silver has already broken out of a 50-year downtrend relative to gold. Macleod brings the macro proof, a century-low valuation of industrial metals in gold terms, China withdrawing supply support, and a global squeeze forming right when fiat currencies are weakening. Together, they paint a picture of a metal transitioning from neglect to necessity. Silver's ratio to gold has collapsed to historic lows, its physical stockpiles are evaporating, and its demand, especially from India and the broader East, is reaching levels that simply cannot be met by available supply. This isn't a normal market, it's a systemic stress point, and when a suppressed monetary metal snaps, it doesn't return to normal. It finds a new reality entirely, one driven by scarcity, monetary distrust, and a collapse of Western liquidity. That's why today's discussion matters. This isn't about guessing the next price move. This is about understanding the macro reset unfolding right now. Before we dive in, make sure to like this video, subscribe, and drop a comment letting me know where you think silver is heading as global liquidity breaks apart. Your engagement pushes this information out to more people who genuinely need it. We appreciate the support and hope you enjoy the video.
I think silver's having a tantrum and is going to move into a new price reality, meaning it's not going to go incrementally. It's going to go to what you would call a actual fair value. If you want to divide the price of silver into gold, go back 50 years and look at the screen. We're very cheap. You even go to some normal values we saw over that 50-year span, or where silver was in the bull markets of 80 and 2011 relative to gold, that is. Silver would be $200 an ounce. Wouldn't surprise me in the next 6 months. And this kind of event has happened before. It's not like I'm predicting something weird and off the page. Copper did it in 2005. Lead did it in 2007, where they were in a range for decades. And they said, enough, boom. And literally in a couple quarters, they quadrupled in price. Separate events, not base metals, just them. So, I think we're technically set for that. All the metrics I look at say, if you're not in, don't come back in 6 months. It's a new reality. You'll be in a new reality. Look at copper, for example, back then, 2005 to 6, it quadrupled or more in a couple quarters. And a new reality for the next decades. Yeah, it's had some sharp sell-offs after that. But this is different this time. This is monetary metal too, not just an industrial supply-demand deficit situation here. Silver's also money. Even India is now recognizing that, saying, hey, okay. There's a lot of crisis events that are about to occur in our assessment, technical assessment. Stock market is going to implode. That's our argument. We think it's topping. It's been topping since late last year, flip-flopping around, confusing people. When that occurs, central banks will go berserk because there's so many variables that will go under with the stock market, in which case the fuel for gold and silver will go parabolic, just like they will. And no, when we get to the new reality, there'll be probably a new fundamental reality when we get there, in terms of people's assessment of certain institutions, ideas, trends, in which case silver gold be institutionalized, not come back here to test 50 again. Okay. So in answer, that was my answer there.
Great, Alasdair. Your thoughts on the silver market at present?
Yeah, I mean, basically, I think the 2 points worth making. The one real macro point, I think, which everybody should understand, is that if you look at base metals, industrial metals, because silver is being priced as an industrial metal at the moment, then a basket of these industrial metals has fallen in value, priced in gold, to the lowest level for the last 120 years. Now, when you look at the price in dollars of the basket, I mean, it's sort of up, sort of 20, 30 times over that period. But priced in gold, it is now at an 80% discount to where it was in 1900. Now, individual components obviously change because, you've got technological change. For example, some commodities get used more than others and so on. But if you look at, I mean, if you look at the copper, that is central to the whole thing, Dr. Copper. So I think that's the first point I'd like to make. Silver is being priced as an industrial metal. The whole cohort of industrial metals has been suppressed by the paper game, both in terms of derivatives and also in terms of fiat currencies. So that's the first point I'd like to make. If you look at the market now, however, that's sort of and then a further interesting point. China has been controlling the price of silver for at least 2 or 3 decades. Now, China as a silver miner is the second largest in the world, and also she's been importing doré, both silver doré, but also doré of or if you like, ores, copper ores, nickel ores, lead ores, zinc ores, and all the rest of it, which of course is something like 60, 70% of the supply of silver. She has accumulated an awful lot of silver secretly. We don't know how much, but it is huge. You can take, that's the way it is. Now, in recent years, she sat on the price of silver by supplying the West as silver demand has increased. This is why, if you look at the Silver Institute's numbers, it's been in deficit for the last 5 or 6 years. So how could that happen? Well, the answer is supply. That China has made sure that there's been sufficient supply out of what is in the investment line, which actually is strategic stocks, to ensure that the price doesn't rise. She's now decided to stop doing that. That is why suddenly silver has got a bit under it. This is why you've got a problem in the London market with no liquidity. There is so-called liquidity in COMEX, but whatever is there is likely to be held on to, I think, by the people who have got silver and don't want to part with it. Shanghai's liquidity also has been badly impacted. Now, from January this year, and certainly for the next 2 years, for 26 and 27, China has a new policy of licensing exports of silver. And the idea is to restrict exports of silver even further. So this confirms that China has now taken the view, we can't manage the price anymore, we just don't want to lose our stocks. So there isn't going to be the liquidity coming in at a time when India, which is the most dynamic economy in the world now, I mean, growing, 8, 10% per annum, it is where China was 20 years ago, is now beginning to step up its manufacture of technology that requires silver, particularly photovoltaic cells and all the rest of it. And PV production is being subsidized by the government because, on the one hand, they're opening new coal-fired electricity generators. On the other hand, they're sort of trying to persuade us in the West that they're actually environmentally responsible. So, which is why they're doing that. But you've now got India demanding huge quantities of silver. And it's not just understanding that silver is a monetary metal. I mean, one of the things that's happening on that side is that, scrap silver, which you would think would be coming out on these rises, isn't coming out at all in India because people would rather hold on to scrap silver than have rupees. The whole of the situation is an enormous squeeze. And that, I think, is the initial point about where the silver price is going in depreciating fiat currencies. So we're at this fascinating once-in-a-lifetime juncture as far as silver is concerned.
Michael Oliver's latest silver prediction isn't a forecast based on hype, it's based on historical precedent. Copper did it in 2005. Lead did it in 2007. Both metals traded sideways for decades, then snapped out of their ranges and instantly repriced several multiples higher in a matter of quarters. Once they entered their new market reality, they never returned to the prior levels. Silver, Oliver argues, is positioned for the same kind of discontinuous jump, only more extreme, because it carries monetary relevance that copper and lead never had. His point about the stock market imploding is equally important. When equities structurally break, central banks panic. Liquidity injections expand dramatically, monetary confidence falters, and real assets with monetary properties behave violently to the upside. This is exactly why Oliver believes that silver's breakout will not be a speculative bubble that collapses like 1980 or 2011, but a transition into a new secular reality where triple-digit prices become the floor, not the peak. And this is where the macro fundamentals Macleod presents become critical, because while the West still treats silver like a footnote of the industrial economy, the East understands it as money. China has been deliberately suppressing silver's price by providing supply to the West, but is now refusing to continue doing so. India is accumulating relentlessly. Industrial demand, especially photovoltaics, continues to surge. Western stockpiles are vanishing. Everything that once held silver back is now reversing at the exact same time. With China restricting exports through its new licensing regime, and India absorbing unprecedented quantities of silver, even scrap, the West is structurally short. London has no liquidity. COMEX liquidity is shrinking as physical holders refuse to part with metal. Shanghai's liquidity has tightened dramatically. Every pillar that previously supported silver's artificially low price is now collapsing in real time.
The central banks will not use silver as the backing, if you like, for fiat currency. What they're doing is they're concentrating entirely on gold, which makes sense. And of course, in these modern times, instead of having silver coinage, I mean, we have iPhones and we have instant bank transfers, if you like, electronically. So I don't see silver having that traditional role, as it were. But having said that, what matters probably more is the opinions of the collective population. Now, here I see a dichotomy. If you go to Asia, there is no doubt at all that the Asians regard silver as money. Full stop. No argument, whatever. So, I mean, I was interested to see that one of the bullion dealers in Singapore, one of the larger bullion dealers in Singapore, reported that demand for silver coins and small bars at the retail market was basically off the charts. It was far larger than what they were doing in gold. This was literally last week or so. Now, I'm getting mixed reports from these guys' opposite numbers in Europe and also in America. I mean, I think there's a lot more churning, if you like, going on. And I think there's a greater element of the view that, silver's sort of, we've missed it. We'll wait for it to come back, sort of thing. So I think over here, we're not looking at this really as a form of money in any sense. Now, having said that, when it really starts running, people will start making up the story as to why it is money. So I think then there will be a Damascene conversion, and suddenly they will really be going into it. So I think the situation at the moment is they've got a better conception of this in the East, and we've hardly started here in the West.
And Michael, are you in agreement with that? And do you think we will
Absolutely.
see increased inflows from the Western retail buyer as well?
Yeah, no, it's again, as they say, it's the poor man's gold. Okay. A lot of people can't afford to go buy a 10-ounce bar of gold. They can, like that big bar of silver, though. Feels good. Okay. And it's cheap and it's going up more than gold, and therefore it entices more demand there and it's cheaper. So, and so I think, yeah, for the average guy out there who does not going to buy a bar of gold, silver is going to be the hot potato. There's no question about it. No. And it wouldn't surprise me that, silver back in 1980 in the surge then was 6.5% of the price of gold, 1 ounce to 1 ounce. And in 2011, it was 3.5% price of gold. Right now, we're 1.4. Okay. Why, if silver has already broken out of this 50-year decade of lethargy or suppression, might go up quadruple. You can bet that spread might too. Maybe those old highs on the spread relationship will come out as well. Meaning, hey, the high we made in 80 and the high we made in 2011 on a relative basis to gold, even those are coming out. In which case, you do the math. Take silver to 6, 7, 8% of the price of gold. Don't be surprised. In other words, it's a rational move for silver to do what it's doing now, because it was irrational of it to stay suppressed for so long. And it's now saying, out of my way, and it's not going to observe the norms of market behavior. This has happened with other markets. Copper did it in 2005, quadrupled in a couple quarters, and lived their new reality after that. Lead, same thing, 2007, lived in a decade, multi-decade range, and quadrupled in price in a couple quarters and lived in a new reality. Yeah. If they can do it, silver can do it, okay? And why didn't silver do it back then? Brings up that question again about suppression. Anyway, it's a tantrum, but it's a reality-based tantrum, and it will behave like a tantrum. Don't expect normalities. And the public will swarm after silver.
I think you have to understand that the editor of a newspaper actually has a job, and that is to sell copy. He will select the stories, he will select the emphases and so on and so forth that he thinks will achieve that objective. The fact that the press is not mentioning it is not because they're anti-gold, anti-silver, whatever. It's because it is not of public interest. I mean, we live in this world and we think, well, yeah, that's got to be crazy. I mean, how can you have silver doubling and nobody actually cares? But that's the reality of it. It's also true of the political class too. I think you might find that some of the advisors, the deep advisors, like some of the people, let's say, in the central banks advising their government, might mention something like this. They might mention it in an industrial context when it comes to silver. But this is a world which is driven by absolutely rubbish macroeconomics. Macroeconomics is a non-science, for goodness sake. You can't predict what's going to happen tomorrow with a mathematical function. But everybody tries to do it. That's the way people think now in the investment world. They don't actually understand the role of gold and the role of silver as monetary metals within the entire financial system. They've got no idea at all. And mining is a dirty business. Who the hell wants to invest in a dirty business? It's not environmentally friendly for a start, etc., etc., etc. And of course, the brokers basically got rid of all their mining research capability a long time ago. So they're not exactly jumping up and down saying you should buy mines and all the rest of it. So we've got this extraordinary situation, which really is a mixture of ignorance. It starts with public and professional ignorance. And when it comes to the press, I mean, they're just trying to sell copy. And when I can tell you that they might start noting silver when someone goes bust in the derivatives market. But until then, it's a non-story as far as they're concerned.
And Michael, your thoughts, do you think someday we'll see Jim Cramer pounding the table about Pan American silver, and will that be a time to get out?
No, it won't be. What's going to happen is CNBC News is probably going to approach Alasdair and me and want to start the Alasdair and announce at the same time that Jim Cramer is finally retiring. And at that point in time, though, I tell you, probably then it's a good time to maybe take profits on silver. Okay? Okay. It's a good technical metric. Okay. The Alasdair and Mike show on CNBC.
What Macleod clarifies in this final section is that the monetary future of silver will not be dictated by central banks. It will be dictated by the public, especially in the East. Silver demand in Asia is exploding at levels exceeding gold in many retail markets. In the West, ignorance remains the dominant factor, but even that will break the moment silver begins its parabolic move. When the public sees a metal doubling, then tripling, the psychological shift will happen fast. The story people ignored will suddenly become the story they can't stop talking about. Michael Oliver's final point seals the argument. Silver is the poor man's gold, but it is also the more explosive monetary asset. Its suppression created decades of artificial lows, and its breakout will be proportionally violent. The gold-silver spread returning to even half of its historical norms puts silver at levels that seem unthinkable, only because the market has been trained to expect the abnormal. Markets have short memories, but silver's history is long, and it is now catching up. And once the mainstream finally recognizes this, once the media begins acknowledging a move that can no longer be ignored, the repricing will already be far along. The West is late, the East is early, and silver is transitioning from neglected industrial input to global monetary asset, in real time. This is the kind of setup that only comes once in a lifetime. If you found this analysis valuable, hit the like button, subscribe, and drop a comment telling me where you think silver's new reality begins. Triple digits? Higher? And are you seeing signs of tightening supply where you live? Let's build the most informed metals community on YouTube. Your input helps push this information to more people who need to hear it before the reset is fully underway. Thanks for watching and see you in the next one.